So we absolutely have to go ahead and touch on Tesla stock as we ended up seeing a lot of selling pressure for today. And the question on everyone's mind is, well, are we starting a new trend downwards for Tesla stock? Now, if you're not familiar with this channel, my name is Justin from Push and Profit Research. We've been featured on several financial outlets such as Yahoo Finance, MarketWatch, and Bazinga, and a few others. And in this video, I want to go ahead and touch on Tesla stock and what's currently going on, because it wasn't just Tesla stock alone that fell down. In fact, if we take a look at the overall S&P 500, we see a big bearish candle. Same thing if we take a look at the QQQs, which is a NASDAQ index ETF. So a lot of selling pressure for today. And the reason due to the selling pressure is because of a recent kind of post from Trump on his platform Truth Social, which I'm going to read over here, where he ended up saying, "It's just been learned that China has taken an extraordinarily aggressive position on trade and sending an extremely hostile letter to the world stating that they were going to, effective November 1st, 2025, impose large-scale export controls on virtually every product they make, and some not even made by them. This affects all countries without exception and was obviously a plan devised by them years ago. It is absolutely unheard of in international trade and a moral disgrace in dealing with other nations. Based on the fact that China has taken this unprecedented position and speaking only for the USA and not other nations who were similarly threatened starting November 1st, 2025 or sooner, depending on any further action or changes taken by China, the United States of America will impose a tariff of 100% on China over and above any tariffs that they are currently paying. Also, on November 1st, we will impose export controls on any and all critical software. It is impossible to believe that China would have taken such an action, but they have, and the rest is history. Thank you for your attention to this matter, Donald J. Trump." And so we ended up seeing this post and the markets basically started selling off. Now, honestly, if you were shorting the markets, it was a pretty good day for you. For example, I recently, got to speaking with another trader out in Colombia, and she was just talking about her trades for today, and she ended up, shorting the NASDAQ, futures, which that's the reason why you see her screenshot all in Spanish, because she's in a separate country. So if you were shorting the market today, then, kudos to you. Now, one of the things I talked about in yesterday's, insider briefing for those that are insiders at Push and Profit Research was what we ended up getting with this recent data, right? So we ended up getting the survey for retail investors showing that as of October 8th, most of retail investors were pretty bullish. In fact, it was the second highest time that they were bullish for this entire year. And so one of the things I mentioned, right, and in addition to the survey of a lot of retail investors being bullish, we actually got this, chart from Morgan Stanley as well, showing that a lot of money was piled in by retail investors last month. And so what I ended up talking about for those that are insiders at Push and Profit Research last night is that when you see a lot of optimism here from retail investors, you're likely going to see a brief shakeout. And that's simply because of psychology, right? Because one thing you have to understand is that when sentiment gets extremely bullish, and let's actually go back to the S&P 500 here. So when sentiment is extremely bullish, a lot of market participants who wanted to buy have already done so, right? And so that means that there's less demand to push prices higher. And so even a small wave of selling, profit taking, a bad headline can cause prices to drop quickly because there aren't enough buyers waiting below. So a lot of retail investors have already been bullish, exhausted a lot of the buying power. And so getting a news headline like this, and it causes the market to have a little bit of selling pressure. Now, where do I see Tesla? Now, of course, I do not have a crystal ball, but I want to go ahead and talk about Tesla a little bit from a fundamental, but also a technical perspective as well. Starting off with a technical perspective, we have this breakaway gap over here, and usually with breakaway gaps, you don't tend to fill them, but when you have this news headline where now we're going to be a bit more aggressive with tariffs, well, that's a bit concerning, as it could cause more delay for the central bank, the Federal Reserve, to cut rates. And so we may end up filling this gap here, which would actually put us close to this 50-period exponential moving average. And from there, we'll have to monitor to see if Tesla bounces up or if we see more selling pressure and Tesla stock capitulates. Now, why do we want to pay attention to everything that goes on, right? One thing you have to understand is that you don't want to just look at the market from a technical perspective. You need to understand it from a multi-dimensional approach and understand what's going on. And so one thing you have to know is that the Federal Reserve, they have a dual mandate, and that's to maximize employment, but also make sure that inflation doesn't get out of control. And so they have their target 2%, target for inflation, which, tariffs are often inflationary, but then you also have a time period where we're in right now where jobs are kind of difficult to obtain. And because of that, we had the Federal Reserve recently cut rates, right? They cut rates by 25 basis points. Now, when you have this scenario where we're going to be more aggressive with tariffs, that's a bit more inflationary. So that might give the Federal Reserve a bit of a pause or delay on aggressively cutting. But you also have to understand that we're in this unusual dynamic where we have this government shutdown where a lot of the economic data that we typically get isn't available. And so this also delays what the Federal Reserve is likely to do, right? They're very data dependent, but now if they're not going to be getting that data, they're kind of leading or walking in the dark. And so that's a big concern for the market, right? Because that means that essentially what I'm trying to say is that the Federal Reserve may not cut as aggressively as we initially wanted, as the market wanted. And so that means that rates may be higher for longer, which is bad. It's bad for a lot of small companies that need to borrow to go ahead and expand their operations. But think about a company like Tesla, right? Where they sell vehicles, and a large portion of their business, I know we talk about Tesla being a tech company, but a large portion of their business comes from selling vehicles. And so if rates stay higher for longer, that means that it's going to be a bit more expensive for individuals to go ahead and finance a new vehicle. And so a bit concerning. Now, we do have one thing I do want to point out. Let's go ahead and actually X out of here. I do want to point out that Tesla, I thought I had it here. We'll talk about it in a second. They have their earnings on October 22nd, so earnings are right around the corner. But the good thing about Tesla, from a fundamental perspective, is that they aren't going to be hit as bad as a lot of other automakers in America because of their domestic integration and how they go ahead and conduct business. And so this actually means that Tesla, although they don't have the tax credits available, may actually be much more suitable for individuals to purchase. In fact, we see here the Model Y, right, which has won many awards for being one of the cheapest and safest vehicles out there. We see that right now you could finance the Model Y for $622 a month, right? Of course, you could play with the parameters for financing and kind of change where you're at, right? You could even make it 84 months, right? Which of course, that would reduce the price to $566. So Tesla fundamentally may do better than a lot of other automakers, but it's still going to be a challenge. And so what we're going to want to monitor, of course, is if there's any updates with Trump and the president of China, the prime minister, because this likely is going to be a kind of exchange where it ends up coming to be a trade negotiation with both. We know Trump is pretty aggressive, and we may see this kind of be of a short-term issue, and we may end up striking a deal where we see things kind of just get taken off, right? And it's kind of just like what we saw back in April, where we saw a lot of selling. Back in let's actually parse over to the S&P 500. So we'll take a look at SPY, and we saw here that April was kind of like the bottom of the market, and we ended up rallying up significantly. So we may end up seeing some selling pressure, but ultimately have this resolved at the end. Of course, no one has a crystal ball, and maybe trade tensions can even get worse as we progress with negotiations with China. But this may end up just being kind of a big nothing burger. But of course, we have to monitor what's going on and understand the ramifications of what this means for the Federal Reserve and what it means for companies like Tesla. So the area that I'm going to go ahead and be watching is, of course, this area right over here, $390.60, because that's the 50-period exponential moving average. That's where we fill this breakaway gap. And if we fall down to this area but start to show signs of recovery, then that could possibly mean that this is a big nothing burger. But again, we have to be very mindful of what's going on and not just look at Tesla from a technical perspective and look at the charts, but see what's going on globally. But with that said, hopefully you guys enjoyed this update. Make sure to check out the links in the description below, and I'll see you guys on this next video right over here. Take care, guys.